Good afternoon, everybody, and welcome to our webinar for probably the last webinar of 2021. My name is Marc Ashton. I'm going to be your host for this afternoon, and I'm joined by Grant Locke, Head of Outvest. Sorry for that. It's definitely been a long day. I think we were just saying just before you came on just how exhausting this year has been and how challenging it's been. But I think there've also been a variety of opportunities that have come through. And, having been part of the Outvest journey of the last 2 years, it really has been something exciting to follow. And maybe just before Grant jumps into his presentation, I mean, Grant, you've survived 2021. What are some of your kind of highlights when it comes to looking at the Outvest product offering?
Thanks, Mark. I think if you take a step back and you look at the South African consumer, I think that's actually the highlight. I think 2020 and 2021 put a lot of pressure on a lot of individuals. And I think what people are doing is that they're starting to take control of their finances. And for me personally, one of the reasons we created Outvest was to help people take control of their money, to build wealth for themselves. And that solution plays into people taking control of their own finances. And so we've been really happy to see the engagement going up around taking control of money, building wealth, building emergency funds, understanding how to look after their money with a view to increasing financial security. That kind of engagement from the broader population, I don't think's actually been around before. We forget that the last time there was a pandemic like this was over 100 years ago. And I think the behavior, our individual behavior, has changed so fast that I don't think many of us even realize it. And that doesn't always have to have negative consequences. And I think I've seen a lot of positive consequences coming out of people taking control of their finances. So I think whilst I'm tired, I think it's a really, really great place to be.
And I can completely echo that. I mean, I just look at the discussions that people are having, whether it's on social media, whether it is in, around the braai. Just even I look at the discussions our staff have these days, and it's so encouraging to see 20, 21, 22-year-olds sitting there and actually talking about their money. They've almost demystified it in a lot of ways. The tools are out there. I think there's been a lot of innovation in the sector. And I think one of the reasons why I've really enjoyed kind of following your journey is, I look back to when robo-advisors were very first pitched in South Africa, and a lot of people just said it'll never work. There's no opportunity. It'll always be via a financial advisor. And people have taken that as a challenge and been able to say, cool, let's go and build some really cool products. Let's get it out there. I think you've been a pioneer in a lot of ways in terms of following through on this. And I think that just seeing what's come through has been awesome to do. So, I mean, maybe you want to take us a little bit through this journey that you've got in terms of the product that you're rolling out, why it matters from an offshore investment perspective, and then we'll go into a little bit more detail as we go along.
Thanks, Mark. And I think, you know what? I know everyone's tired. I'm going to try and keep it really short and really tight so that you guys get more of your day back. So I think the first thing is that one thing that's actually fascinated all of us now is that there are financial advisors who are partners of ours who are using this technology as well. So that's actually for me been fascinating in that a financial advisor can now sit with the client and build an investment journey in 10 minutes. That saves the client a lot of time. It saves the financial advisor a lot of the time. And I think that helps us reach more individuals to give them better quality advice. The nice thing about all these individuals learning more about finances, and the nice thing about social media, although as difficult as it is sometimes, there's nowhere to hide anymore. There's nowhere for product providers to hide. If your product is good quality, people will find it. And that's what's been so heartening for us. So let's get into this whole thing, right? So global wealth and diversification, investing money offshore has been a massive topic for everybody for such a long period of time. That topic is mainly driven out of fear. The fear that South Africa will not be a good place to invest your money. The fear that you can get better returns by investing offshore. Now, in my view, that's not really the right way to think about global investing. Global investing is not about getting a better return. Now, that sounds crazy because so many people have told you that you can get better returns over the last 5 to 10 years by investing in the US markets. That may be true over a 5-year period, and that may be true of history. But you can't say that that is necessarily going to be true in the future for always. And I'll give you an example. I don't know if you guys know this, but over the last 120 years, one of the best performing equity markets the world over has been South Africa. In fact, over the last year, and I can't remember the exact to date, but over the 1-year period, I think it's to the end of August, South Africa was the best performing equity market. So you must be careful about making a decision based on return. And we didn't build the Outvest Global Wealth Builder as a short-term return, and neither did we build it to counter the fear of South Africa. It's actually about protecting your wealth. That's the purpose of the product, is to protect wealth and to help individuals spread the risk of exposure to a single country. So if you think about it like that, then this is really more of a product that would suit you. So why does global equity matter to clients? Well, the problem with South Africa is that it is actually quite a small market. And that if you're investing in South Africa, living in South Africa, spending in South Africa, then you are actually exposed to a fair amount of risk, political risk being one of them, currency risk being another, and even the fact that there aren't the same type of investments globally as they are in South Africa. These are real reasons why you can invest money offshore. But you must be careful about doing it out of the fear or the expectation that you're going to get a better return. South Africa is a small market, but it is an important market globally in terms of, because we're very highly regulated. We also have a very, very volatile currency, but it's also a very liquid currency. And we actually have, despite lots of concerns, we have a very relatively transparent country when you compare us to other emerging markets as well. So I think that there is a good reason why people should consider investing offshore, but it's not necessarily one that has a short-term mindset either. You know, in our view, the Global Wealth Builder is a product that you should invest in for at least 8 years. So we'll take you through the journey though. So how do you do it? Well, Outvest has got this byword for investing. The core of everything we do in Outvest is about simplicity. We believe that I think people underrate keeping things simple. So all we do within the Global Wealth Builder is we offer a tax-free savings plan, tax-free savings account, which is the savings account where you can invest up to 36,000 Rand a year or up to 500,000 Rand over your lifetime. And you can use that tax-free savings account and invest in our Global Wealth Builder, which invests itself in the core shares total world stock ETF, an exchange traded fund that's traded on the JSE that invests in over 9,000 shares in 49 different markets. You can also invest in our general investment account. Technical terms, we call it a voluntary plan, but in reality, it's just an account in your name, and we invest your money in the core shares total world stock ETF. The difference between the tax-free savings account and the voluntary account is the tax-free savings account's got limits. You can only invest 36,000 Rand a year in there. And the second thing about it is obviously 500,000 Rand lifetime, but you don't pay any tax or any local tax inside that exchange traded inside that investment. In the voluntary plan, you will pay tax inside those investments, but you can invest an unlimited amount in each. Both of these best used as long-term investments. Okay, so hang on a second. I've just lost my presentation. There we go. The question I think everyone here might have joined with is, I want to go offshore. Now, there's two ways in which you think of offshore investing. The first is, I want to send my money offshore, as in I want to take money out of my South African bank account and I want to invest it, send it to any other country, the US, the United Kingdom, Denmark, Turkey, Brazil, Russia, India, China. I want to send my money there and I want to invest it there. That, I think, is in many cases what most people want to think about when it comes to offshore investing. And there are a few good reasons why you should do that. But I think in the main, you can get just as much benefit. In fact, it might even be a little bit cheaper to invest or get global exposure through a local investment like the one that we offer. So I'm not saying that you should do either. I'm giving you the example of when you should think about actually sending money offshore. So the only real difference that you can really consider, in my view, when it comes to sending money offshore is if you're worried that at some point the South African government might re-implement exchange controls and stop you from moving money out of South Africa. In reality, over the last 10 or 15 years, exchange control regulations have been becoming less restrictive than they have been in the past. In my view, I think that the risk that suddenly South Africa will stop currency leaving South Africa is limited. So, if this is something you worry about, that might be a reason to take money offshore. The second reason is that if you are yourself planning to leave South Africa in the near future, then you want to be able to draw that money from somewhere else in the world. It also might be that there's a specific type of investment that you can't get in South Africa, or you have a very large capital amount of money that you want to move in one lump sum. It's quite difficult to move on a monthly basis money offshore, and the reason why is because it gets expensive. You've got to do the currency translation. You've got to have the fees involved in settling in that foreign account. You've got to buy it. The last thing you need to be aware of when you move money offshore is that from an estate planning point of view, you just need to be aware of the fact that you need to now have another will to deal with the money in the jurisdiction in which it's located. So for us, and in my personal view, using the Global Wealth Builder, which is a local product, to get offshore exposure gives you the same currency exposure as if you went offshore. It's just far simpler to do. So that's what I think about this. And if you want to, there's a podcast that I worked with Warren Ingram on called Global Investing Made Easy. And if you really want to know more about offshore investing, you can go and listen to that podcast. There's 4 series which I interviewed Warren about this. Okay, so the second thing is a lot of people feel that they should be using active management. And for some of you who don't know what that is, it's where you've got a professional fund manager who's involved in picking the right stocks every single day. The issue is that it's not clear or it's not certain, for example, that you're going to get a better return than if you just use a very, very simple rules-based or passive investment approach. In fact, the evidence suggests that it is quite difficult for an active fund manager to actually beat a passive index. Now, I'm not saying that active management never works. I'm just saying that on balance, if you were to spend your time doing something, then I think looking for active management does take a lot of effort. And you need to be sure that you or comfortable with the risk that it might not necessarily work. There are some good active managers out there, but it does make sure that you can find them. So when we built this product, we did things very simply. We went with a passive investment approach. Passive just means it's a set of rules. Those set of rules tells the fund that's predetermined what stocks to buy. And in this fund, there are over 9,000 different stocks. So it's a very, very simple way. And what makes it nice is that it's very cost effective. And for us, cost is a very, very important determinant of what people get out of their investments. The last thing is that there are probably many of you out there who believe in having lots of different instruments. So if you want your global portfolio, you've got a little bit of this and a little bit of that and everything like that put together. We actually, again, went super simple. There really is only one instrument that you buy. It's the Core Shares Total World Stock ETF. So many of you, or some of you out there are probably wondering, sure, should I not have the safety of having lots of different investments from different managers inside my portfolio? Well, there's 2 things that we thought about. The first is that When it comes to global investing, many of the funds that you invest in will have a lot of the same holdings, a lot of the same underlying stocks in them, Apple, Facebook, for example. And so by buying more than one fund, you're not necessarily going to get that much different exposure if you buy a globally diversified fund or a series of globally diversified funds. So we thought, keep things simple. The second reason why you might want to keep things simple is that whenever you change your portfolio allocation inside a voluntary fund, for example, if you had it in a voluntary fund, you might be subject to capital gains tax. Or if you do it quite frequently, you might even be subject to income tax. So it creates complexity around having many instruments or many types of instruments in a portfolio. And it's not necessarily certain that you're going to get better returns anyway. Remember, I mean, we've got 49 different markets in this one fund and over 9,000 different stocks. It's incredibly well diversified. That's one of the reasons why we chose the CoreShares Total World Stock ETF as the fund that we use for this particular product. So this is really around the elements that we were trying to answer when we were designing this particular product. I'd like to quickly take you through the journey and how it works when it comes to signing up. So give me a second while I just bring this up again and get online, and then I can take you through exactly how it works. Let me just see. Okay. In the meantime, if you have any questions, please put them in the chat and we'll try and get to them.
Yeah, Grant, I've got a couple of questions coming through, so it's great. We'll pull them together at the end of your preso.
Okay, sure. So I'm nearly ready to go back into the journey now. Give me a second. Let me just find out where I can share my screen. Okay. Hopefully that works. I assume you can see my screen?
Yeah, you're good.
Modern investing. Okay. So this is the Outvest website. And clicking on Get Started, you've got this new tab that's come up called Global Investing. This is our newest product. And I'm going to quickly show you a little bit more about the product itself because I want to go through the fees. So again, exactly what I've said, super simple, one transparent fee. What we've done differently here is that I'm a big proponent of keeping fees simple. And what Outvest has done, which I think is market leading in South Africa, is that we have tried to develop something called a one fee. You see, even if you were trading stocks with a stockbroker, there are many different types of fees in that value chain. And what we've tried to do is aggregate all of those fees and swap them out for a single fee that looks like this. So for anything less than 315,000 Rand invested in this product, you'll pay a total fee of 1.5%, including VAT, which includes all of the trading costs, the brokerage costs, the investor protection levies, the custody costs, the administration costs, everything is included in that one. Even the access to the ETF is included in that cost. For anything more than 315,000 Rand, the fee is 4,700 Rand per year. So if you've got R1 million invested in this particular product, your total fee is 47 basis points, 0.47%, with nothing else to pay. No other VAT, no other trading, no other brokerage, no other nothing. For anything more than 1.18 million Rand, it's 0.4% per year flat. So for us, that is a very, very powerful fee model in South Africa. And why fees are so important is that it helps investors get more out. Every Rand that you pay means another Rand that's not invested and earning growth on your investments. So we feel that fees are very important to the investment. So there's some of the stocks that we've got in the portfolio. It's for illustration only, and obviously it'll change as the index changes. The other thing that we bring to the party is we've actually got a tracking system that we've built in to help you achieve your goal. And I'm going to show you how that works quickly. So let's get started. So you click on the Get Started button. You quickly enter some details. Hopefully you can still hear me. Okay.
Yeah, your audio is all good.
Okay. Oh, goodness me. Email address. You can give it a name if you want to. You don't have to. And because I'm an existing client, obviously, of this business, I'm going to have to enter some details. Let me just get my phone quickly. Asking me for a PIN. Okay. That's 266346. 266346. Okay. Right. So the key thing is you can start off with a monthly contribution or a once-off contribution. So let's say I put a monthly contribution as 2,000 Rand per month, or maybe let's make it 500 Rand per month. And a once-off contribution of just 500 Rand. Minimum contribution in this product is 100 Rand per month. Now, the key thing is you need to try and invest for the long term. That's when you're going to get the real benefit of this product. So what we propose is that you should be investing for at least 8 years or more in this product. Remember, you can get your money out at any time. We don't have penalty fees. You can stop your debit order. There is nothing, no penalties for changing your mind with this product at all. It's just that the real benefit of what you're doing will only become apparent after a few years of investing. And that's the same with all equity-like investments. It takes time for you to build up the growth in that investment and the compounding growth. That's not to say that it won't change value over the short term. It might go up, it might go down. You might have a 30% drop in the investment. But over time, and history has suggested that if you stay invested for a long period of time, then it's one of the best ways of achieving growth in your wealth and beating inflation. The second thing that the platform actually does for you is that it helps you decide whether or not a tax-free savings account is right for you. So if you are contributing to any other tax-free savings plans that are in your name, then the system probably won't recommend a tax-free savings account. And the reason why is because if you exceed the maximum contribution limits, you can get hit with quite a heavy penalty from SARS that you probably weren't expecting. So whilst you can have tax-free savings accounts at many different providers, and you can each put some money into them, the collective amount can't be more than 36,000 Rand a year. So to keep things simple, if you don't have any of the tax-free savings accounts and you're investing for a decent period of time, the system will probably recommend a tax-free savings account for you. The other bit that you need to know, and when this product might not be suitable or the allocations might not be suitable, is if you have, if your finances are strained in any way, shape, or form, then global investing might not be suitable. But we've got other funds that the system will recommend to help make sure that we can continue to build your wealth. But if for some reason you need money without realizing it, you can access it here. And whilst you can do it anyway, there's just less of a chance that it'll be subject to the volatility it would in the Global Wealth Builder. So I'm just going to answer these quickly. This is what we call our reveal page. So the reveal page itself gives you a real plan in your mind of what you're trying to achieve. So you can see that the system recommends that you invest in the core shares total world stock ETF using the tax-free savings account. You can see that it's giving you an estimated growth rate range of between minus 2.9 to 16.4%. I want to stop here for a second. What we do at Outvest is that we use over 120 years of market history to try and get an idea of the sort of the range of possible outcomes for this investment for you after all fees. So what we're trying to really do is give you an idea that you can track a specific target in mind. So you can even do that here, right? So let's say I do have a specific target in mind. I want to reach 250,000 Rand. Now what the system will do is recalculate the monthly contribution that you're going to need based on our expectation of returns over the last 120 years, take into account your time horizon and net of all fees, to achieve a target amount of 250,000 Rand. I want to also let you know something that I'm personally incredibly proud of in the platform. So because we have this information about what everyone's trying to achieve, every time you go through any goal in Outvest, we know what you're trying to achieve. And we track whether or not people are successful in real life at achieving their targets using our technology. And we've got over 4 years of data of people trying to achieve their investment targets using our platform. And what we found that for every individual who's invested on the platform and who's followed the plan of the system, 84% of all investment contracts that have finished their initial time horizon and have followed the investment plan without withdrawing early have to date achieved 95% or more of their target after fees. 84% of all contracts have achieved 95% or more of their targets when they use the technology in the platform. And that for me is around delivering outcomes. And that's the real beauty in Outvest, in my view. Okay, so you've got everything you need to know. In fact, if you wanted to, you could even say, well, I don't want the Core Shares Total World Stock ETF. You could go and pick another fund if you wanted to. So the choice is really yours. Plus, there's everything you need to know about what the fund invests in, the asset allocation, the sector, the regional allocation, who the fund manager is, the management company, why we recommended the fund for you, what you need to know about a tax-free savings account, and the one fee as well. So all the fees that you need to know. In technical terms, we call this the effective annual cost of the investment. Right, and that's really it. If you're happy with that, you click on Invest Now, and you can go through the process. I've already, obviously, am a client already of this business, so my details will carry on coming up, and I can automatically set my banking details here. Let's say G Locke, account number, a randomized account number, say Bank African Bank, account type current, set the debit order date, the source of funds, and sent the once-off contribution, and then the debit order date, source of funds, and click on next, and that's it. Now, whilst I'm not a client yet, I now have what we call in the financial services world, I've got the record of advice and the mandate. So theoretically, you've got everything you need to know to make a decision about whether this investment is right for you. And it takes minutes to do. That's another thing we're very proud of in the business, is that you've got everything you need to know before you make a decision, not afterwards. So there shouldn't be any surprises for you in terms of what the business can do. And that's it. Once you click on confirm, you're done. You don't need to upload bank details. You don't need to upload ID documents. We do everything in the background to help make your experience as smooth as possible. And once you're invested, you can come back at any time and you can track that target. So that target that we were talking about with regards to the Global Wealth Builder of 250,000 Rand, we'll retain that target. And you can see how you're tracking against that target if you want to. Right, that's everything from me, Mark. I told you I'd keep it short.
You're
I hope
on the dot.
Everything you need to know.
15:30 on the dot. No, it's very much appreciated. And it's good to see some of the comments, man. They made some interesting comments about the tracking of the investment and the implications when you change some of the input values. So I think that's great. And then there's a comment there about being, in terms of managing risk with the access to offshore equity, etc. Got a couple of questions here that I just want to run through, and I've just put them all together to try and consolidate some of them. Is it possible to put this in as part of your retirement annuity on the existing Outvest platform?
I wish it isn't. But what we've done recently is that we've actually changed the asset allocation of our RA. And what it's got is a very similar version of the Global Equity Fund, in fact, with a little bit more emerging market exposure. It sits as close to the maximum as we can get it. It's one of the interesting things about passive investing is that we literally just set it. I think it sits global offshore exposure in the moderate fund sits at 28%. So whilst I'd love to do that, the problem is that the Regulation 28 of the Pension Funds Act is so clear around what you can and cannot do. The best we could do is effectively run, in fact, almost like a carbon copy of this exact same product as the offshore exposure in the Out Moderate Fund. That's as high as we can go. So that's the global equity we use in the Out Moderate Fund.
Absolutely. I suspect it's probably a common issue in terms of, I think a lot of South Africans are asking that question about Reg 28, but I think it's a completely different discussion. Second question that's come through, can I ask my financial advisor to invest in this product?
Absolutely. We'd love to chat to your financial advisor. We've got about 9 financial advisors on the platform at the moment, and we're always looking for more. So if you have got a financial advisor, then we would be more than happy to chat to them, and they could use the platform, and they could use this with you as well. And we've built a number of tools for financial advisors. So they'll be able to submit transactions on your behalf digitally, and then you can approve them. So that comes to anything on the platform. And we protect the financial advisor as well, because they can use all the technology we've built for their own practice. And one of the key things that a financial advisor gets out of this is that they can scale. I mean, you saw how quick it was to sign up an investment. Imagine if sitting with your financial advisor took 7 minutes and you had your investments up and running. And for him or her, it makes a big difference to their lives. Because I think what people don't realize is that whilst it may seem kind of slightly tedious to use sometimes, the compliance burden on a financial advisor it's actually incredible. I think it's insane. So hopefully we can help them.
Absolutely. I'm going to consolidate this question into one. Have you back tested the returns and any idea of what the dividend yield or net yield is on the portfolio at the moment?
I'll have to check the net yield for you. I should be able to get that quite quickly. Just give me a second. I'm going to try and bring it up for you. Just hang on a second while I'm here. I think in terms of the back testing, we've got to be quite careful what we do with that. The actual, we call it a forecasting process, but in reality, what it does is it uses past data. And the data, the 120 years worth of data that we use for forecasting people's returns in this particular product, is probably one of the highest highest quality data sources we can find at the moment. And it's put together by the London Business School. I think they've just released their world index, which is what we actually used in developing the expected returns for this particular product. I think the product hasn't been around long enough to get an historic yield. I'm just looking at the fact sheet at the moment, so I don't necessarily have an historic yield. I would say dividend yield here would probably be in a region of 1 to 2%. That's my feeling. It's not necessarily going to be a high yielding product from my point of view, but I could be wrong. And I would need to, I'm giving you my impression. I'm not giving you a fact.
Fair enough. We will take it under advice. The next question, and speaking of advice, I know you're always wary about answering advice-related questions on platforms, but the questions come through. Is it wise to open a tax-free savings account for my child?
Sure, that's such a good question. Hey, I remember when this topic was covered by Simon Brown, because I listened to that one as well. Obviously, I'm fascinated with finances and all things financial, and we've thought about it too. So there's 2 things about that. One, the benefit is that theoretically, and I say theoretically, you could actually save enough money for that child for their retirement. And imagine saving for your child, because I mean, if you save enough money from the time they're 0 to 20, for example, you put the full 500,000 Rand away and you leave that to compound for 40 years, it'll probably make a significant dent in your child's requirement to save for their own retirement. So as a wealth creation tool, using time to compound returns it's beautiful. It's absolutely beautiful. The problem, in my opinion, is not that theory. I think that that theory is sound. The problem is that your child owns that. So when they turn 18, you have absolutely no control over that investment. They have every right to withdraw every cent that's there. And so I worry. I mean, I've also got a son who's 8 at the moment, and I also consider doing the same thing as well. You know, if you can be sure that that money is not, and remember, you're utilizing their own tax-free savings accounts, annual limits, and their lifetime allowance. Do I think that the lifetime allowance will be increased from 500,000 Rand? I believe so. If you look at the US, the UK, for example, they've got something called an ISA. That ISA amount has increased significantly over the last 15 or 20 years that they've offered it. So I think that the Reserve Bank will raise it. I mean, I can't be sure, but they have already raised the annuals. So I don't think there will be space for you to contribute. You just got to be aware that it's not yours and that it is in the child's name, and you are, in a way, it might be better to do it with them, that they're aware of it and that they understand it rather than to hide it from them. But again, that's a very personal view. And, as I said, I'm grappling with the same problem myself.
Yeah, absolutely. I mean, I know that for my kids are a little bit older, but 17, 18, 19. And it just talks to compounding. But I mean, the 18-year-old, just through a couple of small contributions through their Outvest portfolios, suddenly sitting with 30,000 Rand there. He's got a little bit of a property portfolio that's being established, a bit of income, a little bit of offshore. And we were actually able to sit down the other day and talk through his portfolio and what was in it and why it went in it. And a simple example, he told me he didn't want to invest in Tesla, he wanted to invest in Ford. And so far that deal that's paid off for him in some respect. So it does become a fun discussion as well. So I agree with you from that perspective, is that it's a journey that you kind of walk together. I think if you empower them to at least know about their money and be curious about their money, it makes a huge difference. Just one more question that's come through here, and then we're going to go and give away a bit of a prize today. But a question from Tabani asking, the platform is super user-friendly. Is there an app by any chance?
There is actually. So we've got native apps for both iOS and Android. So you can go to the Google Play Store. In fact, we've got Huawei as well. I think Huawei Marketplace app is out there at the moment. So we can, everything that you can do on the website, I think almost everything you can do on the website, you can do on the app as well. Trying to actually kind of remember where there is one or two things that the website can do that the app can't. But I think fund switching is the only thing that's a bit trickier on the app that we haven't built in. But the app does for all the sign-ons and monitoring your account and changing your personal details, changing your debit orders, your monthly contributions, can all be done by the app.
Awesome. Thanks, Grant. And I think that brings us to the conclusion, barring one more thing. We always are of the view that by you investing your time, there should be some form of, if I take the pun, outcome from your investment. So we did agree that
absolutely
with this particular webinar, we would be giving away a copy of Warren Ingram's latest book. For those of you who don't know Warren, Warren's one of South Africa's leading financial planners, and he's done a lot of work, and a lot of his content is very easy to understand. If you follow the Outvest story, you'll know that Warren's been very engaged and a big one as part of that. But so we do have a winner. It is we've done it by random draw here, and it is one of the delegates who has not only registered but also attended. And the winner for today is Samukelo Nkosi. So well done, Samukelo.
Congratulations.
And they will be in contact with you to get that to you at the end and get that couriered to you. So thank you all for your time. Grant, as always, thank you for investing your time with us and sharing some of the insights. And we look forward to chatting and getting an update in the new year.
Thank you so much. And I really appreciate the time. And I look forward to seeing you again. And I hope everyone has a great break.
Excellent. Thank you, everybody. Have a good evening.
Okay. Cheers.